So they reached 264,000, which is right up there near maximum size long positions. So what takes place usually is profit taking. So over the last couple of weeks, we can see that they have reduced their long positions from 264 to 250 and now 240. And what does that look like on the charts when they do that? A drop in price. How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was reported on August 1st, 2023. Here's a brief snapshot of the positions held by the institutions as of that date. And so let's begin, as we always do, by taking a look at gold. Here we go, ladies and gents. Look what has been taking place. We look at gold and we can see that recently they rallied up their longs from 266,000 all the way down to 220 and then up to 263,000. Okay, this is almost where they were at the peak back in May 2023. So what's been transpiring ever since then? Well, they've been increasing their longs, and that got you to this area here. Well, it got price to this area here. We've since seen a small decline in price, which contacted this area of demand that we have located on the chart. It's a low quality demand, as I've had it labeled here. It's a low quality demand zone, so we're not expecting much to happen from this area of demand. But bottom line is, we take a look at the coloration of the cells, and let's see what we see. First off, we can see that the long and shorts cells are giving us a neutral signal all throughout here. Take a look. Okay, the cells are blue, which means we should be neutral with our positions with respect to gold, because the banks are not focusing on any direction, so we shouldn't be focusing on any direction at this point. Okay. Retail traders are about 71% long right now, 29% short. So they're more geared to the long side, and this is happening as price was declining. Okay, they were getting in long at these highs, price started to decline, and they've been adding long ever since. So at this point, anything can really happen with this asset. Okay, the fact that they are very neutral here should tell you something, and this is since pretty much the beginning of the year, around March they've been neutral. So there's nothing here to indicate any direction, any sustainable direction, so it's not something that I want to trade at this point. So at the time, I am sitting on the sidelines with respect to gold. All right, so let's take a look at oil now. So we can see that recently the banks were adding to their short positions here. Okay, they made them somewhat aggressive between mid-June to the end of July, near the end of July. And then all of a sudden they offloaded a significant portion of their short positions, causing them to go into cooled off territory, okay? Which means they're not focusing on shorts anymore. And what took place during this here? It's right here. They got out of shorts. Okay? They added shorts here, then they got out of the shorts, and now price is rallying to the upside. Now, if we look at long positions, we can see that they've been increasing, but not in a dramatic way. Just from, 316,000 up to the 363,000 area. If you look at the coloration of the cells, they are still light blue, all right? They're not super cooled off like the short positions, but they are somewhat cooled off, which is telling me that they're not really focused in on long positions at this point. They are increasing, but it's not super aggressive, all right? If you look at the coloration of the cells here, you can see that they recently turned green, somewhat green, and they were red not too long ago, okay? Bearish, and that's at the lows of price, the recent lows back in June. Now we see price is rallying up here as we are getting this strength coming into their sentiment. And so let's just look at the weekly chart. Okay, this is what we've got. When we look at the chart, we can see institutional supply is located here, and we can see institutional demand is located here. Price dropped down into demand, and then demand came in. Okay, they offload their shorts, and now they're increasing their longs, but not to an aggressive amount. So if price is to rally up this area, I would suspect that it can easily drop back down, since that's institutional supply up there. Okay, so you got to be careful with that. All right. Okay, there you have it. That's institutional supply. That's the latest area where the banks were significantly selling oil. Okay, it caused them to drop price from the $88 area all the way down into the 60s. So price is heading back up there, but again, not very aggressively. So when price gets up there, I would suspect that we're likely going to see a reaction to the downside. All right, so just keep that in mind as we go forward. Now let's take a look at the US dollar. When we look at the US dollar, we can see that, let's look at this column here first. Okay, you can see that there's been moments of cooled off neutral, okay, neutral. And over here you can see a little bit of bullishness, okay, but look what's happening recently, bearishness, okay. Now put that into context with what's happening with price. Price was dropping, hence the bearishness, okay, related to the drop that's happening down here. Now we have institutional demand located right here. All right, price has got a little bit more left that it can drop to before this area comes in. Now remember, this is a supply zone up here, so that's selling pressure that would take place from here if price were to get there, and this is buying pressure. Okay, now the fact that we don't have a strong sentiment here means that price is in range. Okay, it's in range right now, and it's happening on the monthly chart, so there's a lot of room that price can move up and down here. Bottom line is shorts have been increasing slightly. All right, from cooled off 5,000, 8,000, now we're up into the teens, but this is nothing sustainable at this point. All right, when we look at the long positions, we can see that they are cooled off, and they have been since the beginning of the year. So not focusing on long positions, they just recently started focusing on short positions. They just recently became a little bit more bearish with the sentiment, but this is all just recent. And this could mean that price is going to drop a little bit more, but again, we're coming into a massive area of buying. So I would suspect that we're probably going to see a push to the upside or some stalling of price down this area should price get down there. So these are some things that you should pay attention to and take note of. So no strong momentum in any direction with the US dollar, and these are the key areas that I'm watching on the charts. All right, next we go to the Aussie, and we can see that for quite some time the banks have been accumulating short positions and then distributing those shorts, and then accumulating and then distributing, and last we are seeing they are starting to accumulate again, increasing from 88 to 80 or to 90,000 up to 98,000. All right, look at the coloration of the cells, somewhat red but not super aggressively red. All right, so what's happening with price? Well, when you look at the charts, we are at demand, and that is what's causing this upward pressure on price, and we're coming back into it. For there to be any type of real momentum, we'd have to see some momentum to the upside, breaking past these highs here, or this area of demand has to break, and then we would see momentum to the downside. What we know for certain is that the banks have been increasing, decreasing shorts all this time for quite some time. So they don't seem to be committed in any direction at this point. So I would be very skeptical about how price is going to be moving going forward. All right, when we look at what retail traders are doing, they're about 71% long right now. Okay, 71% long. And this is as price has been dropping. So price is dropping and retail traders keep on adding more and more long as price declines. So I don't have any strong opinion of what direction oil or Australian dollar is going to be heading in, because so many mixed signals on here. Okay, we don't have any specific trends on the charts. The banks are not really aggressive in any direction, and they're not sustaining any type of move that they've been making over the last year. Okay, so I'm just sitting on the sidelines with respect to the Aussie, and I'll wait for something a little bit more clear to unfold. Okay, next we have the USCAD, and let me bring your attention to what we can clearly see here. Okay, bullish sentiment for most of the year. Recently we went into bearish sentiment right here. And what did that bearish sentiment get us? This decline here, okay? But as I've been pointing out, it declined right into a demand area. It's at demand that we expect to see bullish pressure, and this is what is taking place right now. So even though the sentiment is bearish, we are getting bullish price action because of the demand zone that is coming into play. Now, as you can see by looking at this chart on the weekly, we don't have any supply. So price is free to move up quite a distance if it wants to. The bearish pressure that we've been receiving has been all because of this area here. This was the area that was hit in 2022, and we've been getting this bearish pressure ever since. This was our downside target, which has recently been contacted. It was placed there because of the demand area that price was coming into. And so, you know, taking things to the next step, what do we see? We see that they were aggressive with longs, all right, most of 2023, but recently they become very neutral, okay, neutral with their long positions, excuse me. And at the same time, during contract expirations, they went and turned their cooled off positions with shorts and made them more aggressive. All right. But again, this is within the context of price dropping down into a demand area. Now we're seeing the bullish pressure to the upside. Price can rally. How far is it going to rally to? We don't know. All right. Because there's no immediate supply areas to make contact. What I can tell you is that retail traders are 88% short. They went in short at the bottom here, right as price was coming into demand. So they're obviously not viewers of this analysis, because they would have known not to get in short when price is coming into a demand zone. Demand is where the banks buy. So this is why we had our target there. We were encouraging shorts up until our target, and now we cannot encourage shorts because our target has been reached. So price can rally up, and we got to be careful of that. And because we don't know how far this is going to go up, it's best to just stay on the sidelines for now. All right, now we have the US Swiss. Longs have been slowly getting more aggressive, but nothing really to speak of, because if you take a look at the coloration of the cells, you can see that they are mostly blue. Look, longs, shorts, okay? Colorations of these cells here are a little bit blue, but nothing special, okay? Kind of relates to what we're looking at on the USCAD and the dollar, okay? The bullish momentum, and then we see price rally. One thing to take note of is that there is supply right up here. So any kind of move to the upside is going to be short-lived, okay? If we do get up there with price, I'd suspect that we're going to see some bearish pressure come back into play here. So again, there's nothing strong here, nothing sustainable. Retail traders are mostly long, 76% long at this point, okay? So we'll just leave it at that, and we will continue forward. So now we move on to the euro. The euro's been a very interesting one, so let's point out what's taking place right here. For a very long time, as you can see, going back to 2022, longs have been aggressive, all right? And you can clearly see that right here with this move, all the way from the lows here back in 2022, okay? So aggressive positioning by the banks on the long side causes price to rally up. Now, this whole time, they were not focused on short positions, as we can clearly see, because this whole time shorts were cooled off, okay? That's why the sells are blue, because they're telling us that their positions were very cooled off. When we relate these positions to previous positions, we can see that they're very cooled off. So as you can see, they're not focusing on short positions at this point. So they reached 264,000, which is right up there near maximum size long positions. So what takes place usually is profit taking. So over the last couple of weeks, we can see that they have reduced their long positions from 264 to 250 and now 240. And what does that look like on the charts when they do that? A drop in price. So this profit taking that's taking place right here is related to this drop in price that we are now watching. The interesting thing is that this drop in price is actually happening right from a supply zone. And what have I said many times before in the past, if you've been watching our videos? Supply zones are where the banks either accumulate short positions or they take profits from long positions. And so that is what's happening. Now, if they continue to take profits on their long positions, which I suspect they probably will, it will easily cause price to drop even further. Now, how far down? Well, we have a demand area here, so I'd expect to see some kind of a reaction in price from here. But because we're looking at the monthly chart that has supply in play, there's a very good chance that the pressure from here and profit taking from long positions can potentially cause price to drop a little bit further. I would want to see them start to increase short positions, because I think the initial drop down from profit taking from long positions could bring down price maybe down to the weekly area of demand that we have here at the 106s. But for it to get down to the $1 area, I would suspect that we would need to see more shorts being added to by the banks, okay? What I can tell you is that retail traders are about 60% short right now, okay? They're 60% short. They've been playing a game with retail traders, luring them in, and we went through all of this on our Telegram channel. If you haven't joined our Telegram channel, it's a must. Get in there and watch as the data comes out. We'll tell you what we suspect is going to happen. Like this past week, we had interest rates, we had NFP, well, the last couple of weeks, interest rates, NFP, and we successfully predicted exactly what NFP was going to be and how the market was going to react. This past week, we got that bullish move to the upside with the euro, and this is exactly what we were suspecting was going to happen, because they need retail traders to be buying the euro for the banks to offload their longs, right? This is how it works. So very interesting one. I'm watching this one very closely. I'm suspecting that we'll probably see more downside coming. But again, I outlined exactly what we suspect might happen and what we would need to see happen with these positions for things to develop more to the downside. Okay, now let's take a look at the pound. The pound. I was mentioning a few weeks back that price was coming into a supply zone. And supply zones are either going to be used to get into short positions or to take profits on long positions. And so if we take a look, we can see that they have been aggressive with longs starting from April. Okay, March, April, and what does that look like on the charts? This, the move to the upside. Okay, so them increasing long positions causes price to rally. We reached 135. You see how red that sell is, how aggressively red it is? That's because it's telling me that the positions are reaching a maximum amount. When they reach maximum amounts, they need to take profits. And when they take profits like they have over the last couple of weeks, it fuels a move to the downside. And as you can see, we got that move just recently. So they're distributing a long position. Sound familiar? Well, it should sound familiar because that's exactly what they're doing with their euro position, right? And look, okay, look at shorts. Do you think they're focusing on shorts right now? No, they're not. So if we look at the weekly chart, we can see that demand is not until further down. Profit taking, you can see from 135 to 90 got us this far down. All right. So for it to propel even further down, they would need to start adding some more short positions. Okay, because 90, you know, we got a little bit more to go where they can get it down to the 40,000 range. But for there to be more of a sustained move to the downside, we need to see some shorts increasing. So at this point, anything can happen. They can continue pushing price to the downside by offloading more shorts, or longs, I should say, and adding more short positions. They could do that. Very possible that they do that, because considering where we are at with the euro, they've reduced their pound long positions quite significantly comparing itself to the euro. Okay, they've done more offloading of their long positions. So it's hard to say what's going to happen here. When we look at the monthly chart, we can see a supply zone is just further up here. So over time, price can head even higher before we get a more significant move to the downside. But this rally started from demand. And it's been a significant rally ever since it got down there. So what are we looking at? We see retail traders are about 52% long. They don't know which direction it's going in. So they're somewhat long, somewhat short, nothing very clear with respect to their positions. I'm not looking to trade the pound. I don't see anything clear. I want to see what's going to happen over time. I want to see what kind of sustained move they're going to be putting into play. When we look at the percentages here, we can see that the sells are green, bullish, but that's because we just finished rallying up into supply. So this indicator to me does not tell me to buy the pound simply because we're profit taking, we're in supply. That's not a signal to be buying. So I'm sitting on the sidelines with this one right now, and I'll wait for something a little bit more clear to take place. US dollar, Japanese yen. If you've been watching our videos, you would have known that we've been watching this one for quite some time. We called the very top of this one right before it dropped, and we used the positions held by the institutions to be able to call that drop because we saw that they had reached a very aggressive long position. So we knew that profit taking was going to have to take place, and that's what happened. And recently, again, we had our targets reached, our upside targets reached here, which I gave to members. And then what happened is their long positions became super aggressive again as our targets were being reached. And we locate our targets using the supply and demand concepts and principles that we teach at the school. We located the supply, and therefore we used certain techniques to locate our targets. Our targets are areas that we believe the banks are going to either start taking profits on longs or start accumulating short positions. And in this case, it was take profits on long positions. So if we're long, we want to get out when the banks are getting out. And it was perfectly timed. This target was given to members quite a while back before price even reached to those highs. And now we see our targets got hit, and then we get a push to the downside. It's almost like magic how these targets get hit, and then we see the big drop-offs. Well, it's not magic. It's simply the banks taking profits on their positions and them taking profits at areas of supply that they create on the charts. So locating these areas are, the essential ingredient to be able to locate these targets for our trades. Now, if we look at the retail sentiment, we can see that it is bullish, and it has been for some time, okay, since the beginning of March. But that corresponds to this massive rally that we got in price. So as you can see, the banks increase long exposure, decrease short exposure, and it causes significant rallies to take place in price. So should we be accumulating a position right now? I wouldn't think that would be a good idea, okay? Because they're offloading their longs. So we don't want to be onloading. We don't want to be accumulating a long position when the banks are offloading it. And shorts are very cooled off. So you don't want to be increasing short exposure as well. Look how cooled off they are with shorts. It means I don't want to be short. They're not short. I don't want to be short. Okay? If we look at what retail traders, they're about 58% short, 42% long. It's a mix of this and that, nothing very solid. So I'm not going to be trading this. This is not a good time to be trading this. I'll wait for something a little bit more clear, something a little bit more sustainable. And then when I see something like that, then I will participate. Okay, last but not least, we take a look at the Kiwi. So Kiwi, we have longs cooled off. Shorts recently somewhat cooled off. A mixed bag of sentiment. We used to be bearish, now became a little bit more neutral. Nothing to see here, okay? We have supply located higher up on the charts here in the 68 level. So if price was to get up there, I'd suspect that we'd see some bearish pressure, but we're not there yet, okay? And, there's nothing to say that we're going to get there. Now, with the potential for a drop in the euro and the pound, because of what we've already discussed, there's a possibility that we see more downside here. But if you look to the left, you'll notice that there's no demand here. So where is price going to drop down to? There's no specific area that we would be looking at this time. So it's not tradable. Not very tradable from what I'm seeing. Retail traders, 72% long. They're adding long as price drops. Okay? And that number can continue going higher if they continue to put bearish pressure on the Kiwi, following what we're seeing with the euro. Okay? So this is something to pay attention to as we head in to the next week and the following weeks. I'll keep you posted. I'll keep you updated. Just make sure you subscribe to our channel if you're not subscribed. Leave us a comment down below what you think about this week's analysis. I'd love to hear what you have to say. And make sure you get the notification bell, okay? So that way when I post some new analysis, you'll get updated information as to what we're seeing with the positions of the banks and what we suspect price will do going forward. All right, ladies and gents, that's it. Hope you enjoyed it. It was a little bit long one today, but I wanted to go into some more detail with you guys. Hope you enjoyed it. Hit the like button for me. I'd really appreciate it. And if you want to learn more about what we're doing here at the school, come and visit us, whiteoakfx.com. We'd love to have you. We've got thousands of students, thousands of members. Our school keeps on growing. We're really humbled by it, and we'd love to see you come and join us as well. All right, that's it. Enjoy the rest of your weekend. We'll talk to you later. Take care.